My next guest, though, not him, because he called this pullback. He's been very cautious on these markets. I want to see if he's changed his mind. Joining me now, Key Advisor Group CEO Eddie Ghabour. Eddie, all right, so you've been looking for another leg lower amidst all the chaos. Is that still in the cards for you?
Unfortunately, it is, Charles. You know, one of the things we've been positioning for since the fourth quarter last year is really the second quarter setup for this year. And now that oil has really gone through the roof, I think that's going to be the nail in the coffin, unfortunately, for consumer spending. And as we look at the data on earnings and you try to compare them to second quarter last year, I think you're going to see earnings revenue growth really plummet. GDP is going to come under consensus, in my opinion. And by the way, we have a Fed that's going to tighten into this environment. Again, that's the risk reward is just not there for our clients. I do believe, even if we get a bear market bounce in the next couple of weeks, that the legs are going to continue to go down. The market's going to go lower, and I think potentially we're only halfway there.
Eddie, what changes your mind? When do you ultimately kind of sense or see that the worst is over? There's certain parameters, metrics for you?
Yeah, there's a couple things. You know, from a Fed perspective, we got to see the Fed change course. Look, I don't think that most people are positioned for the slowdown that we see happening in the second quarter. So, of course, the Fed changing course is number one. Number two is really getting to where we think the bottom in economic data is going to be. And we do think that's going to be in the second quarter. So we believe we're going to have some fantastic buying opportunities, but we think it's going to come in the third or early fourth quarter of this year. So I'll be on here saying buy the dip again like I was last year, just not today.
So in the meantime, I got 30 seconds. Do you hold a lot of cash, or do you try to play, you know, what works in a down market game?
Both. We've got cash, we have staples, we have utilities. Look, you can play treasuries too. When the 10-year went over 2, we started adding long-term treasuries. That's paid handsomely. And even on the up days, there's been low volume on up days, and a lot of these defensive names have outperformed on some of those days. So you can still make money in this market. Right. We're just being very cautious in our positioning.
All right, well, you've been cautious and you've been spot on, my friend. Eddie, thank you so much. Folks, we'll be right back.
Thank you.